All right, everyone. Here we are with the SPX ticker symbol, which is the S&P 500 index. And here we are to talk about all the different things and points of how this has reached where it is today, right? If we zoom out as far out as the dip that happened in March, this has been completely in an upward trend. You can see that in an upward direction. Clearly, it's been working its way up and it will continue to do so. It started here and it's going to reach right now up to here, right? Excuse me for that. Let me get the brush up to there. And the projection is if this continues, that it's going to continue in this upward direction to the point where honestly the S&P 500 is possibly going to hit newer highs and reach even companies that are included in the S&P 500 and American companies that are participating in this program by the Federal Reserve will continue to hit newer highs or rebalance back to normal levels that they once were at or get really close to it. Because keep in mind, the S&P 500 isn't one company, it's 500 different companies and they're all moving in different directions. There could be some that weren't even moving that much before this fall and they're part of this upward trend now, and there's others that are kind of staying stagnant. So I highly suggest paying close attention to what companies you guys decide if you guys want to proceed with this information and use it as an investor. But I'm here to tell you guys the good news that I know a lot of specialists and analysts and top Wall Street guys are saying that the market crash is coming. And I'm not here to discredit them, and I'm not here to say that it's not. I'm nobody to say that it's not, and I'm nobody to say that it will. But one thing I am going to say is that for as long as these Fed pumps are happening by the Federal Reserve and they get released every month, and there's a couple days of uncertainty though in between. But once they get released, that's some great news for us as investors to take advantage of this opportunity and go ahead and maximize our profits and minimize our losses. I do highly recommend everybody watching this video, whether you're a first time viewer or one of my subscribers, do your due diligence, do your research on the companies before just jumping into anything in the S&P 500. And it doesn't necessarily have to be the S&P 500. It has to be an American company that is participating in this Federal Reserve pumps. And we call them pumps, but really it's called the repurchase agreement, where basically companies are getting a total of 100, not 100,000, 100 million, for example, right? 1/2/$100 million companies are receiving. And excuse my ugly handwriting and the scribble scrabble, but this is kind of uncomfortable and I'm doing it on the screen, but I want you guys to visualize it. Companies are receiving that, and to go ahead and receive that, they just have to pay an interest that is so small that they end up paying back $100,000. And that's just to show you. And then they turn it into this. So companies are receiving 100 million in total for their repurchase agreement, loans, or bonds, or whatever it is that they're doing, and all they have to do is pay back $100,000. And these aren't accurate numbers, but this is just to show you the difference between what they pay back, right, and what they're receiving. Like if you just see what they're receiving, that's a large number. If let's say a company has a total of $1 million, they can get 10 times 10 and pay that back, right? $1 million. And they can then get this times 10. 100 million times 10 times. Because if you have $1 million on hand and your interest is 100,000, you can get 10 times this amount on loans and pay back your interest and then keep the loans. Because loans really, with no interest is free money, basically. And then they'll worry about paying that back. But that's what's going on with these companies. They're taking advantage of the really low interest. I'm not saying that they're doing it 10 times, and I'm not saying they have a million on hand, but that was just to give you an idea. And for every single time that they take it, this is their interest, $100,000. $100,000. That's how small it is compared to what they're receiving, which is 100 million. They can do that 10 times if they want to because they have 1 million cash on hand. So just think about big corporations, how much money cash on hand they have and how many times they can do this. And again, those figures are hypothetical. They're not showing you exactly the numbers that they are, but I just wanted to open your guys' minds to what it is. Another thing too, I started my videos on this series right here when the S&P 500 was there and it ended up right here. So when you do the analysis of where it started, right, and where it is, it's been in an upward trend since I began. And the first day before the pump, I slowly did the video and I stated how it could probably come back and recover, or it was going to go to newer highs, or just, level off. And as soon as it came on from the 13th to the 14th, you can see how it leveled off. It ended up leveling off at that point, and it leveled off right here. And then as it continued, it leveled off again, right? Until the next pump. And the next pump was in this process here where it started to then rise. And it went from right here at this point. Let me see if I can write them down. At this point, all the way up to this point. And it did rise because if I bring the symbol, it started at 32.50 and it started the next day after the pump. The highest point was 32.81. That's a $30 difference. And in stocks, that's anywhere between 30 cents to $3-4 difference, depending on which stock it was. So that was significant. And for the most part, on the days of the pumps, most of these stocks that are in the S&P 500 or American driven companies that are participating in this program are usually in the green. And if you're not comfortable trying it out, take a close look at a stock. Look at it the day before the pump, right? The day before the pump and the day after. So the next pump is on the 18th, and I'm going to show that to you guys in just a moment. So if you don't feel comfortable taking advantage of this, it's your first time coming across this, I want to state two things. Take close attention to the 17th all the way through the 19th, even the day of the pump. And the second thing is, I highly encourage you to subscribe and not just click the subscription button, but the bell so that you can get notified and not miss out on a single video because I will be talking about this weekly. But let's take a look at the date of the pump. So certainly this was released on the 13th of August, and here they started the first pump on the 14th. And you can clearly see that from the 14th to the September 14th, from August 14th to September 14th, the first pump was at 1:30 to 1:45 p.m. And it's a really small basis points here. And to be honest, these are good pumps to pay close attention to every day because this is happening every day throughout the whole term of operations because it expires on the 14th and they're going to release the next dates. So on the 14th, until that day, there's uncertainty because between the last pump, which we'll know within the next couple of weeks, there's always a gap between the last day of the pumps of this scheduled term to the next release date, and that's where the uncertainty happens, which you guys are going to see that from the 13th to the 14th, there was something that honestly um, impacted the stock market, especially the S&P 500, but not those days. A couple days before that, because nobody knew when this was going to come, and it finally got released. So the most important pump here, I know I told you guys to pay attention to this. If you guys want to look at the 1:30 to 1:45 p.m., how the market does, check it out. But this one's a lot harder to know what's going to really happen because there's a lot of up and down going on throughout the day. This is more like to save the market from falling if it's slightly dipping and the effects of it are seen towards the end of the day or maybe even after hours. Now, this one is a pump from the beginning of the day from 8:15 to 8:30 a.m. and it's plus 10 basis points. And that goes sometimes to see the effect of it doesn't happen right away. It happens throughout the day or even towards the middle of the day. So that is something to keep in mind and pay close attention to too. Usually, if you want to get in, if the day before is looking like something that works for you, you're more than welcome to get in. But that's something to think about whether you want to get in before or on the same day of the pump and take advantage and ride the pump. Because sometimes the pump, it takes you up and then throughout the rest of the day, it slightly goes down, or even the pump's effect attracts so many investors that investors continue to stay for the next day. So it all varies, and also how the market's doing overall and what news is being reported. But right now, the next first pump is Tuesday, August 18th. And that's the date that you will see it reflect in the market. Now, I want to zoom in and show you guys what had happened when the uncertainty was there and nobody knew when the next pump was. So the last date of the pump from the last scheduled dates was from it was on the 11th, but from the 10th you could see that it went from 33.59 to a high of 33.80. That was a $30 difference. And soon after, it fell. It fell fairly quickly all the way to 32.26, 33.26, excuse me. And it fell there. Now, the anticipation, because people were starting to get, you know, back on track with the investments, or even seeing it fall that low, they saw it as attractive and as a buy and as a steal at a discount. A lot of the bulls and people as investors speaking, they were the ones that loaded up on stocks. They were anticipating the next pump date. And from the 12th to the 13th, there was a run, and on the 13th, it slightly leveled off. The announcement was made that there'll be a pump, and I guess some people said, okay, well, I'm going to take the profits from here to here, and then that's how this slowly dipped. It was Friday. People were clocking out, trying to leave with profits to start the next week. Now, the most important thing I want most of us to pay attention to is this has been going on for months and it's been in an upward trend. And another thing I want us to pay close attention to is when I started this series. So I would tell you to go back and look at how this chart has been acting over time and in the videos so that you can see where it was and how it acted the next day of the pump and how it acted over time to build up to this point. That's something that you could see broken down before it even reached it so you can study the behavior. But just where this pump video series started was right here, right where my hand clicker is, and it's 31.27. And now we're at 33.72 after all the ups and downs. The point of the matter is I'm doing these videos to show you guys that the market is heading upwards. From 31.28 to 33.72, that's about $200, right? Per index piece that you own if you were to own the S&P 500 index. And that's on the SPY, I believe a difference of like um I'm not sure, like $20, $30 between there and here. I mean, that's significant as well per share of that ETF. And if you got into any S&P 500 index stock that you felt strong about, no matter what, you started here, and now that stock is probably up here with the S&P 500. And I highly recommend paying close attention to any stock and check them out from the 13th of July all the way up till this point and see how it's behaved. Has it moved up with the S&P 500? Check it out for yourselves. I'm just here to inform you guys. I'm just here to enlighten you guys. I'm just here to show you guys. And the last thing I'm going to talk about before ending this video, because I know it's a lot of information, I want you guys to see the possibilities. So if Monday is good and this continues in an upward direction, all the pump is going to do really is bring it to a newer upward direction. This is Monday, right? Monday, and this is the pump. Brings it to a slightly newer high. I'd pay close attention to it after 12 p.m. or after 11 a.m. when everybody starts to get spicy and jumpy in and jumpy out of the stock market. Unless you intend to hold, I wouldn't worry too much. But if you intend to probably do a swing trade or a day trade, then I'd pay close attention to it at some point in the middle of the day before it drops again, because that's what it tends to do on the day of the pump. At some point slowly fall and kind of level off, but it levels off at a higher point than where it was before, which is the interesting part, and that's what it continues to do, and it's proving to do that. Another thing too, if Monday has a slow dip, then on the day of the pump, what it's going to do is from this dip bring it up to this point and level off here, or bring it from this point and level back off here like it did on the 13th of July and leveled it back off right there on the 14th. But then from there, it built the momentum to go up here, level off, slight dip, and then here we are to newer highs over time. So with these pumps, if you're a day trader or a swing trader, you can definitely take advantage of it as it goes throughout the weeks and the days. But another thing too, if you are a long-term investor or you like to hold, as long as these terms are released and they are showing us that the next date is a month from now, then that means that there'll be one more month of obviously pumps, and that is your decision as an investor to either buy here and hold up to here, or even have bought here and continue to hold, because this is going to continue in this direction no matter what the ups and downs are over time. So if you're just running across this, I'd really highly just suggest you guys pay close attention to how it acts this week and then go from there, whether you want to swing trade it, day trade it, or you want to buy like I'm showing you guys from the beginning of my series here and hold all the way throughout. But everybody has their own way of trading. Everybody has their own options of trading. If you want to be a swing trader, day trader, or long-term investor. But the most important thing is I'm here to inform you guys. I will be posting weekly videos. so that you guys are up to date, well equipped, and ready to rock and roll so that we can make some money as investors. I would love your guys' feedback if you guys watched the other videos and had time to before, or if you're now coming across my channel and going to check out those videos as well. I would love to see your comments down below talking about the behavior of the stock market and how it's been acting since I started these videos. And anybody that has been using the information that I'm sharing with these pumps, and it's been working for them, I highly encourage you guys and would appreciate from any of you investors and viewers to comment down below your experience through any of those times of those pumps and how it's gone for you. Thank you guys so much for watching. Hope you guys learned something new, found it informative. Don't forget to hit the like button, subscribe to my channel. Don't forget to click the bell so that you guys can get notified, and let's make some money.